What's up, you guys? Benson right here. I'm super excited to bring you to this brand new video. Forex risk management that I'm going to be applying for 2023, and I just want to teach you guys how to do that so that no one will be left behind, because I want everybody to make mama proud. Forex risk management is a critical aspect of foreign exchange trading. Because Forex is a high return business, so all traders should be aware that there might be high losses too. So that's why it's important I have to teach you this Forex risk management so that you'll be able to minimize losses and maximize profit. And in this video, I'm going to be taking you on how to draft a well-detailed risk management strategy. So the first step in drafting a proper risk management strategy is to determine what type of trader are you and what type of risk you can take on per trade. And this is what we call risk tolerance. So for some people, they have a low risk tolerance, some have it medium risk, some have it high risk. If you're like me, high risk gang. Let me see your comments in the comment section. So what you could do is, whether you are the low risk, the medium risk, or high risk, there's no one that is best. All you just have to do, learn what type of person that you are, your personality, and then master that personality and then make the best use of it. In all cases, we all will make money, be able to minimize losses, and also be able to maximize profit. Once you have determined the type of a trader that you are and the risk tolerance that you fall into, now you cannot proceed by determining the type of risk that you want to take. One popular approach to this is using a stop loss order. So stop loss is an order that you give to your broker that whenever price gets to a certain stage that you are willing to take that loss, you should cut you out. Whether your phone is off or whether you're not on the trading terminal or on the trading platform, these losses will just be cut and then to be kept. Say, for example, you have an account of $1,000 and then you placed an order and then you told your broker to put your stop loss about 10% below your entry threshold. What that simply means is, if price gets to that 10% entry threshold, then it's going to cut you out in 10% loss, thereby limiting your loss to 10% of your actual balance. Isn't that nice? I mean, that's pretty cool. Say, for example, you placed a trade on GBP/USD, which is right here, and then you're going to say, right at this point, I want you to buy on a $1,000 account. So you don't have to risk all your $1,000 account. You just have to risk, say, 10%. So by using the stop loss level, it's just as simple as quoting or just coming here and clicking on the long position, or just click on buy. And then this will mean that your entry threshold will be exactly quoted at the current market price. And then your stop loss should be about 10% below the current market price. So this place that is green simply means you want price to go to your upside. And this place where it's red, this is your stop loss threshold. Now, if price comes down to this point, this level, which is 1.21857, this is assumed to be like 10% below your entry threshold, then you are agreed to be wrong and you should stop your. And let's try to play so you can see what I'm talking about. So if price keep coming down, you see, you would be in loss. Now price hits this point, then that means you wouldn't have to deal with this loss that even come up to this extent, because immediately price got here, the market would have actually locked you out automatically and keep your other account balance left in your own trading platform. Another approach to risk management is position sizing. This involves adjusting the size of a trade based on the amount of risk a trader is willing to take on a particular trade. For example, you can decide to take a smaller risk if you have a low risk tolerance range, or take a larger risk if you have a higher risk tolerance range. This approach allows traders to control the amount of risk they are willing to take on in particular trade. Traders can use a combination of both stop loss order and position sizing order. This is the best one that I use, and I also want to be teaching you guys today. And there is a tool in order for us to do that in simple terms. This can be an effective strategy for traders who want to limit their risk whilst you're trying to take up big profits. So I'll just go ahead and show you how I'm doing it, and then you can as well just replicate that on your own end. And then you should give this video a thumbs up and also subscribe if you are not yet subscribed. In order for you to get this done, all you just have to do is to head on to this website, which is here, right here. And then when you get to this website, go to position size calculator. This is the calculator you're just going to be using. It's pretty simple. So you're here, you have to select the currency of the account at which you have right now. But I'm using a USD. I think almost everyone should have USD account. But if you don't, select the currency which you're using, then you have to put in your account balance. So since we'll be using $1,000 as an example, I'll just go ahead and put $1,000 there. The risk percentage. How much risk do I want to risk on this $1,000? So if I'm a conservative person, I always recommend using 1% for conservative risk tolerance, low risk tolerance. For medium risk tolerance, you want to use 2%. For high risk tolerance, I want to advise you to use 5%, depending on what you want to do. Depending. So let's go ahead and use low risk as an example for this trade. So let's say the stop loss level on this trade, which we took, was how many pips? let's use this trade that we hit stop loss, was about 14 pips stop loss. So I'm just going to come in here and put in 14 pips stop loss. So I'm going to change it to the pair which I love trading, which is GBPSD, because that's the pair right here that we are using as an example. So with that selected, all I just have to do is to click calculate. So what this simply means is I'm risking 1% of this account and we're using 14 pips stop loss. So if this trade goes against me, if it hits my stop loss, the amount at risk is 10 USD. And then the next question I'd love to ask is, Jeff, are you willing to risk 10 USD today on this particular trade? If it is yes, then I'll go ahead, go on my MT4 and select 0.07 and place the trade. Then that would give me this result that I've desired for. So please kindly just ignore this one, because they're just repeating exact same thing, what standard lot means. Hold on, before we go to the next step, I want to tell you a little bit about the broker that I currently use, which is Xness. Xness is pretty big on risk management and also have diverse assets which allow you to diversify your portfolio. That's the next point I'm going to be talking about now. Another approach to risk management is diversifying portfolio. Traders may decide to want to diversify portfolio across other assets like stocks, bonds, cryptos, any other thing, so that they don't have all their risk in one particular market condition. For example, a trader may invest in a mix of currency pairs, stocks, bonds, and maybe some cryptocurrency and some other underlying, and maybe like penny stocks, any other thing, so just so they don't have their money in one particular currency. But that's actually against my own investing rule. I mean, you might not want to go with mine, you might just try this one out. But what I always believe is I prefer studying one particular pair, understanding it, because you should know the pattern. Then that way you're definitely going to make a lot of money. That's what made me a lot of money. But however, some other people also take this route, diversifying their portfolio, so that if anyone is not acting right at each particular time, then they get to study and focus on the next one. Finally, it is important for all traders to keep track of their performance, and so that they'll be able to understand what exactly is really working, whether it is a high risk, medium risk, or low risk tolerance. In conclusion, if you're able to follow these steps that I've just listed out and make sure you practice over and over again, you definitely will be able to have a very good risk management and position size management strategy for this new year. That's how I'm going to be killing it. I'm sure you guys should also be putting in the work too, and also do your own research and make sure you're also killing it on your end. That'll be it on this video. Make sure you guys watch other videos that are going to be popping up, and if you have more questions, drop that in the comment section. I definitely will make more videos for you guys, and also give a heart in the comment section. Bye for now, guys.